One of the questions we've been getting a lot from clients lately is, how does the new Trump tax proposal affect them and their estate taxes? Well, there's a couple different pieces to the Trump tax proposal, and the one I want to focus on today is just with the federal estate tax that he's going to be covering there, not the income taxes or other pieces. The federal estate tax, remember, sometimes called the death tax, and the number everyone always talks about is the federal estate tax exemption amount. Currently that exemption is $5.49 million per person, which generally means if you have less than $5.49 million when you die, you don't pay any federal estate tax. Now, one of the proposals that President Trump has proposed is to completely get rid of the federal estate tax exemption number, which means you could have an unlimited amount of money and never have a federal estate tax. So you might have $100 million or $1 billion and still would never pay a federal estate tax when you pass away. This seems, in theory, like it could be a good idea. It's going to certainly not tax some of those folks on the higher end, although with a $5.49 million per person limit, it really doesn't tax that many folks to begin with now. Now, however, there is one piece of this plan that isn't getting as much publicity, but it is one of the proposals that's out there. And it's if we get rid of that $5.49 million limitation, one of the things they're also proposing is to have a carryover basis on investments after death. So what that means, right now, if you were to go buy a stock for $100, and then you waited a few years and that stock went up and it went to $300, and you went to sell that stock, you'd have to pay capital gains tax on the difference between what you bought it at and what you sell it at. So the difference there is $200. Now, one of the nice things about the way estate taxes work now is if you purchase the stock for $100 and then it goes to $200 or $300 and you pass away and you pass that to your child inherits the stock not at the $100 basis, but at the $300 basis, which means when they go to sell that stock, they get a step up in basis, is what it's called, and they don't pay any capital gains tax on it at all. Now, one of the pieces of the Trump tax proposal is we get rid of the $5.49 million, but the basis that you purchased the stock at ends up being a carryover basis to your kids after death, which means if you bought that stock for $100, you die and your kids inherit the stock and it might be worth $300 then. If they went to sell it, they would still pay capital gains on the difference from where you bought it to when they sold it. That's a tax that potentially could affect a lot more families than the $5.49 million and up group that the federal estate tax currently affects. So if you have questions about how this might affect your family or your estate plan, certainly give us a call or let us know and we'd be happy to talk with you about it.